Hello, ladies and gentlemen, fellow traders. Welcome back to the live show with Rob. Aha, we're back. Coffee with Rob, of course. Lovely day. I hope you guys are all looking forward to the government shutting down in America. How's it, David? Hello, Shane. Yeah, we'll talk about that a little bit. It's no big deal. And we'll see what to talk about. Hope you guys are all well. Hope you guys are making loads of dosh and everything is going well. It's been an interesting week. Very interesting week. Brent crude oil has gone against me again. It was over $100 up, and then it's come all the way back down again. So lovely. And then, of course, the United States dollar, South African rand. This is the most interesting one. It just keeps on baffling me. And if it takes out the stop loss, so be it, then I'll accept it. But I have to say, this is amazing because the news yesterday was that the government officials and the people in charge of the hospitals, and there was one particular hospital called Tembisa, they stole all the money out of it, stole a couple of billion and used it for their own purposes and fancy cars and all the rest of it. And I'm pretty sure that's not just one hospital, because the whole health system is falling apart, not to mention the rest of the country. And then I look at this and I look at the rand being so strong. There's only one reason for it, and that is the dollar being so weak. There can't be another reason for it. But even then, it's unexpected. And the all share in South Africa is going up as well, which is also quite incredible. The Canadian dollar, some of you know as the loonie because it's a loonie. It's coming back. It's got the resistance and it's starting to come back down. I'm just watching the first support level, and then we'll see how she goes. See if she goes all the way back down to the main levels. That'll be quite interesting. But yeah, what's going to happen to the S&P 500, the NASDAQ, the DAX, and all those funny things if the government should shut down, as they call it, shut down? It's just they haven't reached agreement on the economy. What actually does happen, though, it happened in 2019. For all those traders who weren't there at the time, who don't know about it, who haven't experienced this, when this happens, effectively, salaries stop getting paid in government departments and things like that, which can affect, people can get a bit iffy about that and a little bit unrestful, let's say. So it does affect markets in one way or another, and it also takes money out of the system, which was in the system for other purposes, which was being used for whatever purposes. So it does affect the markets in one way or another. So you will see some effect, but at the moment, everybody is just sitting and holding station, and they're quite happy to be undecided or leave markets as they are, because this has all happened before. And they're probably in the back of their mind of the full belief that this will get resolved and it'll all go away and it'll all blow over and everything will just be fine. They're not far wrong. But if there is a shutdown, there is going to be some correction here. I'm actually hoping that there is some correction, because that correction can be good the rest of the market, so you can actually get some nice trades in. But we shall see. Gold is retracting a little bit. This could be a result of dollar strength. Most of these commodities are going up because the dollar has been weakening. So if the dollar starts to strengthen back a little bit, it may cause the commodities to correct slightly. I expect gold, they're probably going to go for the round number. They're probably going to go for the 4,000, try for the 4,000 or something like that, and see what happens. It'll be interesting to see if they find that, or see if they get to that. It's been an interesting time. And it really does remain to be seen whether things are going to, take place or not. Now, if you're only trading indexes, and you're only trading on the US 500 and NASDAQ and DAX and things like that, when events like this take place, it gets a little bit tricky to trade, because they're only going a certain, you don't know which way it's going to go. Whereas with the currencies, it's a little bit easier to trade. So what I looked at for today's trade of the day was the Australian dollar, United States dollar long. I weighted it to the long side, but it could go to the short side as well. But my preference was to the long side, simply because it broke the structure here. It was on a bearish trend, it broke up, and it broke the structure to the upside. It's going through this resistance level, and if it breaks up and goes past that prior high and breaks out, that could be a really decent long trade. That said, if it goes the other way and you get a red candle coming out the bottom here, you could have a really good short trade all the way down to here as well. So it depends which way it goes, but I just weighted my choice to the long side because it looked more long than short. It looked longer than shorter. Longer than shorter. Yeah. So that was my feeling on that today. That's kind of where I was with it. Guys, don't forget, trading's risky. If you don't like risk, you shouldn't be trading. Just to point that out, just to keep that going, because a lot of people don't realize how risky trading is. So many people just get involved in trading with a view to, we're just going to trade. It's interesting, and I had a guy the other day who said, I don't use stop loss. Are you crazy? I don't need stop loss. The market price always comes back. In other words, he's referring to this kind of scenario where you're in a range most likely, and if I'm long on this and it goes down, the price will in all likelihood come back and I'll get my money back. That's kind of the feeling that he's putting out there. But unfortunately, there's one thing you don't understand, and that is, if you haven't been in the market for a long time, you won't know this. And that is, the market can remain liquid a lot longer than you can. If you've got really, really, really deep pockets, you can work without stop loss because, yeah, somewhere down the line and eventually, the price probably will come back on everything. The question on that is, how long is that going to take? How many years are you going to wait for that to come back? And do you have enough money to carry that loss? Because let's say you're in the S&P 500 and you're at 6,700 and you've got a rather large position in. Let's say you've got $1 million in the S&P 500 and this thing drops halfway. Do you have enough money to cover that leverage, to cover that loss? If it's 1-to-1, you'll be okay because it'll be $500,000, you'll still have $500,000. But if it's leveraged, the percentages multiply and it's going to be a completely different ballgame. So do you have enough money if this thing corrects, say down to 4,500 or down to 5,000? Do you have enough money in the bank or in the brokerage account to cover that loss, to cover that drawdown? Because then you can tell me, I don't need a stop loss because it will come back. And you're right, it will come back. The S&P always comes back. The question is, can you handle the loss? This is why we put the strategy in place with the stop losses in place, to protect the loss. Because how far can you carry it? How long can you carry a loss? For example, I'm in loss on the United States dollar, South African rand, to the tune of $180. I'm $254 is my stop loss, and I'm only targeting 353. So this is a really not a great trade. And it's going against us. But if I let this run past 254 and keep on running, eventually I'm going to be at a point where I'm like, I've just lost too much money on this trade. I've got to get out. Rather just let it go at the original plan, at the 1%, walk away. And if you really want to, look for a new trade. I've probably traded this a couple of times. Doesn't matter. Just let it go. When somebody says to me, market price always comes back, then I understand already that they're not very experienced in the market. They don't know much about the market, and they haven't seen many losses in the market. They haven't seen a market crash. They haven't seen the markets move against them in a really, really, really big way. It's kind of funny, but there's a lot of people like that. Shane says there is 11 hours before gold 3 months candle closes, so I'm expecting a small pullback or wick formation. Yeah, there is a pullback. And look, there's your trend support. The big question with all of these trades is, will it hold support or not? Will it hold the support? If it holds the support, it'll go up again. If it doesn't hold the support, it'll go down. Kind of as simple as it gets. You can play as much as you want into, the government's going to close down or open, or it's going to do this, or it's going to do that, or the dollar's going to weaken and the commodities are going to go up. You can play as much as you want into the fundamentals, but at the end of the day, it also depends on very much on how these things play out and how they hold, and you just have to trade along those lines. Because if we look at the, if we go and have a look at the VIX, this is the news, by the way. This site is closed. Do not enter. Bit of an old government building there. What to expect if the government shuts down? Blah blah blah. You know, it's quite insane. But anyway, here's the dollar, and the dollar is still showing that double bottom on the daily, and it's still in the same area, which is why not much has moved. This is curving around, and it does look like the dollar wants to go up. And of course, the VIX is kind of just standing still and staying in its place. This is a weekly chart. You're looking for those spikes, of course, where they make you quite a bit of money. Those are the ones that make you the big money. But yeah, everyone's waiting for this government shutdown thing. So that's what you can expect from trading this week. Everyone waiting for that to happen. That'll probably happen today, I think. And if that happens, wow, there we go. Another one of those days. But you can still trade. You can still trade. Just keep an eye on it. I think a lot of people are waiting. You can see the candles are very small. A lot of people are waiting to see what's going to happen and how it's going to happen. The Japan 225 giving a bit of a drop there. The Euro US dollar is finding its way up. And of course, the NASDAQ sort of bouncing up, coming around. Nobody's really sure what's happening at this point. Everybody's waiting for something to happen. This is the DAX. Bit of a move. Remember last week, the NASDAQ, the trade we took, was it Thursday? Okay. Where I made the mistake and I took the trade. Oh, that was fun. I took that trade and it went into profit, went nicely into profit. And I thought, well, I've got things to do. And I really didn't want the NASDAQ as a trade because it moves so fast. I don't want to sit watching it. So I just took the stop loss and I moved it into profit and I walked away and it just took it out for a small profit. So it just falls into the category of small profits, like $50, $60 or something, and walk away. It's fine. It was over $100 in profit at one time. And I just left it and it took it out. And I thought, oh, well, we're out of the trade. Doesn't matter. I'm not going to bother about it. And look what it did. It went all the way back up. Can you believe it? So actually that one played out quite well. It actually went in our favor. And I'm not too concerned about that now. So this needs to go there. And this is a low. I'll put it there. Yeah. Okay. That's your NASDAQ. If you want to trade the NASDAQ, you can. But it is quite volatile. It does move quite a lot. Bitcoin, shall we have a look at Bitcoin? Haha, shall we check Bitcoin out? See, Bitcoin flew up, bounced off the support, flew up, broke through that prior high, went up, and it was going nicely, and now it's come back to retest. I wonder if it's going to bounce and go back up, or if it's going to come all the way back down again and try and take the money here. Because remember, there's a supply of money in this level just here, right here at 110. So it might shoot back down to 110 before it bounces back up again. But it looked like it had broken past that prior high and it was going because that was a bit of a resistance. But it seems to be coming back into that level again. But that's crypto for you. Crypto tends to move around in those strange kinds of directions. Big question is, what do you guys think? Is the government shutting down or staying open? In the US, that is. You know, whatever Trump does to try and sort out his country, it's not really helping the rest of us. So, yeah, we're not too concerned about it. We just want to see what happens because it will affect markets in one way or another. It's going to affect the markets, isn't it? Always does. Yeah, this Brent crude oil is really driving me insane. I mean, it's been a while now that's been sitting in that range and it just won't break out. Looks like they're holding it in that range, just keeping it there. Wonder where everyone is today. Where's everyone today? It is Tuesday after all. Normally on Tuesdays, you guys come around and chat. So, I actually have put a video out for this week on how to trade the moving average for those of you who want to know. Quite interesting. And I'm doing like I said last time, I'm doing a couple of videos on different indicators and that sort of thing for you guys. So you guys know how to use them, but don't take it as I use indicators, because I don't anymore. I've used them all in the past. I mean, I spent years using indicators and then realized that I was wasting my time. What a waste of time. Tell you what. I had all these indicators going, all these systems that I used. I had every shiny tool in the shoebox that I'd used in the past. I was even one of those traders with loads of stuff all over my charts years ago. And then you look at the chart and you think, which way should I go? Because everything's pointing in different directions. Crazy. You got to try that out sometime. But as long as you understand that the system and the strategy are different, you'll be okay. That's the important thing. The system and strategy are different. Hey, Sir Lunch, how's it going? Good to see you on board. Good to see you back. So Lunch-a-Lot is here. He's brought lunch and beer. Yeah, no, it's great. Yeah, sure. Summer's back here. Oh, I'll tell you what. I wasn't expecting summer until next month. Usually it takes a while to sort of settle in. And gosh, these t-shirts are annoying. You know, I buy them at the most expensive linen shop and then they still mess me around here. Anyway, yeah, summer's back. I'll tell you what, we're expecting a nice 33 degrees today. Yesterday it was still in the 20s. Yeah, no, it's jumping up again. Normally this time of the year it sort of eases in, but it's kind of coming fast this year. It's coming a lot faster. You must remember, living at the coast, we get a bit of humidity that goes with it. That's always good. Well done, Sir Lunch. Yes, well done. Congratulations. That's amazing. So you passed the 100K account and with a gold trade. It's very nice. That's always a nice feeling, eh? You know, sometimes it's not even about the money. It's just about that you did it. That's successful. That's really, really good. And you know, if you can do that with your funded account, you sure will soon be able to do it with real money without a problem. Okay, as long as it didn't just happen on just that one lucky trade or something, you know, as long as it's a consistent base and you're getting the idea and what have you, then you'll be able to do it with some real good old cash soon. That's important. That's important. Well done. That's really great. Hi, FX. How's it going? FX traders, yeah. Yeah. So Lunch, I had a Discord. And I just left it because what actually happened on the Discord is this, and it's actually quite bad, eh? I don't know. And I tried contacting the guys who administrate it and look after it and everything, and they kind of laugh you off. The big problem with Discord is it can destroy my reputation effectively. And I can't deal with that because effectively what happens is all these scammers come onto Discord and they make out that they're me somehow. They use, and I tried changing the details and even the logos and everything, and they changed it instantly. So it's obviously some kind of bots or whatever that they got running in the background or AI. And then they try and sell people stuff like, you guys, you come on Discord and you're part of the Discord, and these guys are on there and they're trying to bam scam them and sell them stuff and whatnot. And I'm pretty sure that somewhere down the line I've lost some subscribers this way because they probably believed that it was me. I mean, I had one or two people hit out at me in the comments strangely, and I thought, what's going on here? And I think it might be the Discord. So I prefer not to use it. I'm kind of like against it. I'm more for another format. I believe there is a Telegram channel, but somebody told me that's just as bad. I do, you know, I have in the past used WhatsApp with friends and things like that and reached out and what have you. But WhatsApp can also become a bit of a nightmare in the sense that I'm getting millions and millions of messages. So I've got to keep that unique as well. I'm trying to think of a way where there won't be that, I don't know, can I use the word arsehole? I don't know, that scammer out there that's trying to rob you guys and trying to make out that they're me. And as much as I tell you guys that it's not me, there'll be some guy out there that hasn't watched that or hasn't heard me or hasn't watched this show, particularly this live or whatever, and they won't understand and they'll get caught by it. And it annoys the hell out of me. I was hoping that YouTube was going to make the posts and the on YouTube more interactive with you guys, and I'm trying to work out how that works, because that will be good as well if we can post to each other on YouTube. The other thing I was thinking, I do have the Facebook page and I have the Facebook group. Maybe, just maybe, we can interact there. But I do believe that there might be some problems there as well, but we might be able to do something there for interaction. But Discord, I'm done with Discord. I tried reaching out to them and it was insane how bad it was. I'm thinking along the lines of Facebook, or maybe I'll try Instagram or something like that for a connection. And I think we're going to get a better connection that way. I don't know if there's any other great ideas from you guys where it's a bit more secure. Okay. X is Twitter, right? So I've got a Twitter X. What I found with X is, can you actually message each other? Because it's more like just a whole bunch of posts. I don't know. I'll have a look. And then as far as funded accounts go, there are so many of them. All I can say to you guys, I mean, a lot of guys say use this one, use that one, whatever. There's so many different ones. All I say is don't trust any of them at all. I mean, they're all there to make money, but use them to your benefit. Try and make as much money as you possibly can out of them before you can actually get into your own cash account, or if you do have cash accounts and you are using them on the side, try and make as much money as you can out of them. But don't trust any of them with lots of money. If you can get your money out as soon as you can. They're all the same. At the end of the day, they're all the same. And some of them have got some insane rules that will try to just knock you out. So watch out for that as well. Yeah, as I said earlier, somebody mentioned Telegram to me, and I was looking at Telegram, but somebody said to me that they also have a similar problem. But I will look into it and look into it with a bit of detail and see if it's any better. See if it works out a little bit better. Solange tried to get 400K funded with FTMO and 300CK and FTM, and then 2%. Maybe I'm good. Telegram is good. Tom uses it. Okay, I'll have a look into Telegram. I don't know who it was that told me Telegram was also an issue, but I'll have a look into Telegram and see if it's any good. Because I can tell you that Discord made me mad. Just made me mad. I was like, I can't deal with this. It's impossible. And then people think that I'm somehow scamming them. And even though I wrote on that Discord, I will never sell you anything there, they still, they still tried. They still tried. It's crazy. Yeah. That's actually a big problem out there. The only thing I've got is the members area, which is on YouTube. And if there's any links in the description, which I'm affiliated to, and if there's something there that you might have to buy, like a book or whatever, that's got nothing to do with me, there are cases where they might send me a commission or whatever the case because of that, which is great, all right? But that's different. I'm not trying to sell you a course. I'm not trying to sell you something. I'm not going to try and sell you onto any kind of specific platform or anything like that. You guys can figure that out for yourself. But yeah, there's always that guy who doesn't know that, who doesn't understand that, and then he gets caught out by these guys. They're out there, They're out there just waiting for you like little sharks. They're snapping away. Just waiting. Yeah, no, it's terrible. Now this time, when when they're meeting with the government and the government shutdowns coming in the US and all that type of thing, this is where patience becomes key. This is where you really, really need to start becoming patient, because this is kind of a time, you take the US 500 where it's been moving. You've just been able to buy all the way up, and then suddenly nothing's happening. Suddenly everyone's waiting. Suddenly everyone's hanging around, and then you start trying to trade on 5-minute charts and things like that, and you make the mistake. There are times when you're going to have to be patient in the market because nothing's happening, because everyone's waiting for something to happen. Trouble is, when that thing happens, then things move. And if you're on the wrong side of it, you've got to be sure that you're covered. Alexander, say again, mate, Top Gear, you are an easy listening. Alexander, great name, Alexander. That's my middle name. Alex. Love it to bits. Okay, so it would be nice to share pick trade ideas with this group sometimes, I think, and just talk trading. Solange, YouTube was putting something together on the posting for that. Let me just have a look at that as well, because that might be an option as well, where you guys can actually post back and forward as well. Let me see if there's a button that I need to press or something, because they said that was coming up. And then we can also do that on Facebook page or group or something like that, where we can post to each other on that group. Or we can, like you say, maybe I'll start a Telegram account and we can do it that way. Okay, Telegram account might actually be an option. Let's see. Okay, that might be an idea. Just as long as we don't have the same problem there, because if we do, I'm going to shut it down. Obviously, it's going to be an issue. If some guys start trying to copy my details, and because I believe it happened to Tom as well, by the way, Shane. I remember there was a story about he mentioned he had that problem where they tried to copy him. Use his name or whatever the case. Somebody's short on BTC. BTC, Solange, you want to be short on BTC? And you know what I said earlier about BTC, what I saw here, we had this lovely move to the downside, and I saw this lovely move to the downside, and it bounced off the support, okay? There was a main support, there was another support below that, which had bounced off the lower support. There's another one even further down. But it bounced off the support and it shot up nicely, went up, broke past the prior highs and shot up. Now it's come back to retest. A bit of a concern for the long traders as it's breaking below that again. But if that candle closes, we have to see where it is. Is it above that breakout or is it below? If it's below, a good chance it's coming back down to 110 to fetch this money here, in which case you've got a nice short. But keep an eye on it, because if it closes above that line and goes back up, you could have a scenario where it's bouncing to the upside, because it has broken to the upside rather viciously twice already. That's why I'm saying there's a lot of money lying in the middle here at 110. That was quite a big move up, hang around, big move further up, so it just like accelerated. So there will be some bucks lying here. But if that closes above that line and sort of moves to the upside, be very careful, because this could do the same as it did here and give you another big shoot to the upside. This could be heading to 120 again. So just keep your eye on that as far as Bitcoin goes. Fair value gap on BTC. Shane, if you're talking about fair value gaps, which I don't really believe in fair value gaps, but fair value gaps I understand. And fair value gap, there is a big one here that it's in that fair value gap if you want to use that. And then that means it would turn around and bounce back up as well. So there's a lot of things here that are saying it could turn around and go the other way and shoot straight up. I would just keep my eyes on that and be cautious. Just watch out for that, because it is in that, as you call it, Shane, it's the fair value gap. It is there. It is also breaking below that line. It's also coming back possibly to take this money at the bottom here. So yeah, Bitcoin is iffy, but for the short, that is. The long would look pretty good. I think it'll move fast if it goes long. Depends which way it decides to go. So, I mean, I picked, well, firstly, we picked this one this week, which is the United States Canadian dollar, excuse me, the United States Canadian dollar, where it's come off the resistance, it's going down. That should continue on down. And then secondly, we picked Australian dollar, United States dollar. And I did pick it for the long side, but only if it breaks through that prior high. Otherwise, it's a short side, which would give us a trade down to the bottom here, which is why I always say in the members videos, the daily calls, those daily calls are just trades that I'm looking at. So it's difficult for me to say to you, go long on that trade, because at the end of the day, I'm looking both ways. That's why I say, look at the context in the video. The context is important, because my context here is I would prefer the long if it goes to the upside. You get the green candle going up here because it looks gut feel it's going that way. But you could get the red candle coming out on the bottom side, and then we could get the short trade going to the downside as well. There's two trades here. So while I've maybe made the call for long, I still have in the back of my mind could go short as well. So you're looking at both scenarios, not just the one. Always be careful of those trades of the day that I give out. There's context in the video. Yes. Shane, you've been watching too much ICT. You're calling it accumulation levels. It's a demand of money. Yeah, you're totally right. Okay, so that's what I was saying now about that is the amount of money that's lying in this area, the liquidity that's lying over here is huge. You can see the move there. So that is that we call it a demand, supply and demand. That's kind of where the money is. So it's going to take money and go from there as well. If it reaches that, if it goes that far, let's just see what it does. Yeah. So that's interesting. That is interesting. It's also important to note that it might be a good idea in most of these trades just to wait and see what happens with the US government. What do they do? When it happened in 2019, we didn't face a major disaster. It was very much just, the government sort of didn't shut down completely. It sort of partially shuts down. And it's very much like they can't pay this part of the government workers, or they don't pay that, or there's no money for salaries or things like that. People are working without salaries for a while, which I'm sure they can get concession on somehow, or get it sorted out. But it does affect the market, and obviously it affects the money in the market, but it doesn't destroy the market immediately. But if it was to drag on, for an extended period of time, and the entire economy was to shut down, that would be problematic. And a lot of things that are going to shut down is, for example, those jobs figures that you get, those CPI figures that you get, the economic data and that sort of stuff. That's going to stop if they shut down for a while. It's just going to, you're not going to get it. So the market's going to be running blind. It's not going to really know where it's going for a while. So if that is extended, and that's an extended situation where it goes on for a longer period of time, then it starts to become problematic. Then you're going to see some problems in the market, because then the markets are going to start, people are going to lose confidence. They're going to start selling, and they're going to start getting out of the market. That's where the problem comes in. But if it's resolved quickly, then you probably won't even feel it. You probably won't even understand that it happened. One of the big issues I'm seeing is, particularly for the newer traders that have only been here a year or two, you haven't really seen markets correct. You haven't really seen markets go back. So you see this S&P market just going up, going up, going up, going up. And it's a concern for me, because I've seen it before, seen it 100 times before. People, it goes up, it comes back slightly, everyone buys. It goes up, comes back slightly, everyone buys. It goes up, comes back slightly, everyone buys. Now, that's perfectly normal. That's what you're supposed to do. But you've got to manage that risk, because I've seen so many times where people just get sucked into that and they don't realize that markets can come down quite far. So when they see the market correcting, they think it's normal, it's just doing its usual, coming back down. When it goes further than that and it starts pushing further, those same people go, that's okay, it'll turn around, and you're losing $20,000 per point, but it's okay, it'll turn around. And it's not turning around, and it just keeps on going and keeps on going, and it'll turn around because you've never seen it go down. And that's where I see a difficulty with newer traders, is you haven't seen that. And when it goes down, it can go down immensely. And as I said earlier, the market can remain liquid a lot longer than you can. As I said, there was that guy who said to me, the market price always comes back, so I don't need a stop loss. You old man, you don't know what you're talking about. Okay, I don't know what I'm talking about. That's fine. You'll learn. It's the only way for you. You'll learn. You'll learn that the market is much more liquid than you. If you've got really deep pockets and you're a really rich person, you've got tons and tons and tons of money to throw at a leveraged account, and you can cover those losses, okay, then you'll be okay, because it will come back. It always does. But most people don't. Most people can't cover those losses. Most people can't handle those losses. You see, there's a threshold in every human being's mind. There's a threshold. There's a point where you say, I've had enough. I can't do this anymore. I can't keep losing. Because when you've had an account, I've had this situation, okay, where I'm losing $20,000 a point, right? That is insanity, all right? And you're watching it go against you. You're watching it go against you, and you're thinking, it'll turn around, it'll turn around, it'll turn around, and it doesn't. It doesn't. It keeps on going, going, going. There's a threshold where you say, whoa, I can't keep going, and you jump out. And then you've lost usually far more than what you should have lost, which is why I have the strategy I have now, which is why I put stop losses in place. Let it take it out. Let it take your stop loss, walk away, come back another day, look for another trade. Let it go. You have to listen. Let it go. If it goes down to your planned stop loss, let it go. The trade's invalid. Let it move on. Look for another trade. That way, you'll survive the crash. Most people don't survive crashes because they don't believe in stop loss, which is where I was many years ago. I also didn't believe in stop loss. And those mistakes were made. And I learned from those mistakes. How I survived, I don't know. But I did. A lot of people didn't. And most people don't. But there's a threshold to every human being when you're watching a loss. And it goes and it goes and it goes and it goes. There's a point where you say, even as much as you say the market price always comes back, there's a point where you go, I can't take any more. And everyone's got that point. Everyone has got that point. If you're investing and it's one-to-one money, not leverage money, one-to-one money, it's okay. Set and forget. It'll come back. Because you got really, you'll be in a drawdown, but you won't be in a situation where you're going bankrupt. You'll just be losing a portion of your investment, which will come back and it will go back up again. So no need for stop loss on investments on one-to-one money. The problem comes in with leverage. This is where the problem comes in. I still haven't forgotten the 1987 crash. I was back in my 20s and I had just started trading. It is a shock, isn't it? Yeah. And then there was it 97, 96, 97? The 2008 was a biggie. Yeah, there's been a couple. Hey, the random channel, how's it going, man? No pain, no gain. That's how we learn. You learn, but a lot of people don't want to learn. A lot of people don't want to pick up on it and figure it out. You know, most people, when they watch these charts, like I said to you, they don't understand because all they see, let's say you've only been trading for a year, all you've seen is positivity. All you've seen is up, 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 up. And all the videos you've watched of all these fancy guys have told you the markets are just going to go to the moon and they're just going to make you money all the time and so on and so on. And then when it does start going against them, that's when the problem starts to come in. You see, normally what happens with a situation like this, and this is pretty much what happened to me a couple of times, is you build on a trade, build on a trade, build on a trade, build on a trade, like especially on something like the S&P. So you keep making it bigger and bigger and bigger. So let's say you bought the first contract, that 3,000 points one contract, and it built up to 6,700. But all the way up, you've been like 2 points, 4 points, 8 points, 16 points, 32 points, and so on. And you've been adding until you got 300 contracts or something to that effect. And then when it starts losing, it starts ripping all those gains out of your account very quickly. That's what you got to watch out for. How's it, DC? Good to have you on board. So keep your eyes on that. So that's why I say like something like small. So they normally start small as well. So for example, we are sitting here talking about the possibility of the US government shutdown. And it sounds small at the moment. Everybody's expecting it, firstly, not to happen. And if it does happen, it'll be small. It'll just be a partial thing. They'll get over it. They'll sort it out because that's what we believe. They'll sort it out. They always do. They always do. So when it starts going pear-shaped, there's going to be a disbelief. There's going to be that block in the psychology. You're going to say, but they're going to sort it out, man. They're going to sort it out. And everybody's going to keep on saying that, and then it's just going to keep on going pear-shaped until everybody's in shock. You have to be careful. You have to manage your risk. So as long as you have the strategy, and as long as you have your risk management in place, and you're prepared to take that knock if you hit that loss, then you'll be okay. Because what will happen is every time it hits that loss, it takes that loss, you walk away. You walk away, okay, I lost, so be it. It's when you can't take that small loss and you let it grow, you let it grow, and you let it grow. And that's why I say to you, everyone's got a threshold. Everyone's got a point where you can't do it anymore. That's why I say the person who said to me the price always comes back, you are 100% correct. The market price always comes back, particularly in cyclical things like Forex, commodities, that sort of thing. Yeah, the market price always comes back. It always does. Somewhere down the line, it could be in 5 minutes, it could be in 30 years, I don't know, but it always comes back. Apart from companies that are crashing down and going to zero, that's different. But I'm talking about general index trading and that sort of stuff, and Forex and commodities and crypto. Yeah, there's always the up and down. Apart from, be careful of the price always comes back with, for example, the short scenario on Bitcoin. Anyone who shorted Bitcoin is in big trouble because the price is not coming back. It's gone up, right? The price doesn't always come back, but going up, the price generally always comes back. And yeah, with that scenario, you have to have a lot of baggage, a lot of cover. I don't know. It's kind of crazy. I don't have a crystal ball. I can't predict the market. Charts can't predict the market. Nobody knows what's going to happen next. So the only thing you can do is manage the risk correctly and have a business plan and manage your business plan. If you manage your business plan, you'll be managing your trading. If you're managing your trading, you'll stay in the game. It's all about staying in the game. Now, whether this amount is $276 or whether it's $27,600 or whether it's $270,600 as a stop loss, that is irrelevant. What's relevant is it's 1% of your account, and you're going to try and make more on the win. That's what's relevant at the end of the day. And you have to be able to take that loss and move on to take the win. What do you want from trading? You know, what do you actually expect from trading? And this is another question for a lot of traders, especially new traders. What are you expecting from trading? What do you want from trading? Because so many traders get into trading with the expectancy that you're going to take $1,000 and turn it into $100,000 in a matter of 12 months. I don't know anywhere that you can actually do that, but that's the expectancy. So what do you want from trading? What are you expecting from trading? What do you expect it to do for you? Because if you start any business, firstly, you need a plan. You need to know what you want out of it and what you're going to get. The other thing you need is capital. Without capital, you're not going to make that kind of money. And, you know, even to make 100% on your money in any normal part of the world, it's impossible just about. So for you to think that you're just going to get into trading, be a completely new trader against all these institutional traders that have been there for years, and then make some insane turnover on your money is a little bit out there. Just think for yourself. It's a little bit loony. You gotta try and be a little bit more realistic about it. Now, you can achieve more than you can make putting it in a bank, obviously. Otherwise, everyone would just put their money in the bank, wouldn't they? It wouldn't be great. I'll just go down the bank and put all the money in there, and I'll just make interest, and I'll make money, and it'll be easy. And I'll just sit back on the beach and drink beer, you know, whatever. No, it doesn't work like that. So you have to make money. So what do people do? They go look for other ways to make more money than you would make in the bank with your capital. And then you end up trading to try and turn the capital into something bigger or better or more improved. And you pick the highest risk products on the market: crypto, Forex, leverage trading. It's high risk, super high risk, but you don't see the risk because it looks great. It looks flashy. It looks like you can make the money. And you can, but not everyone can. And that's where the issue comes in. Yeah. What I normally do, Solange, a lot is I look at my trading over a really long period of time. So in other words, I don't look at daily profits, weekly profits, monthly profits. I look at annual profits. I look at what I can do annually, because in the period of 12 months, I can only take a couple of trades that will make me an insane amount of money, and then a large percentage which will hit target, and then a higher percentage of trades which just are small profits and losses. So, you know, you're looking for those couple of trades that are going to make you the big money through the year. That's the strategy. So you're going to take a lot of small losses along the way. And that's the difficult bit to accept. DC, this is just I use this funded account. I've got the other one as well, the C Trader. It's still there. And there's another one that you guys can't actually see, another funded account that I got as well. I tried to use that, but it doesn't come up here. And then I just use this for training so that you guys can learn. So you guys can pick up how to do it and how not to do it and whatnot. I don't put my cash account up here because same as you wouldn't want to put your bank account number on the internet. Same reason I don't put that up there, because pretty much like my bank account number, and I don't trust anybody, and I don't trust the world out there, especially at the moment. The world out there is, woo, they even tried to copy my name on Discord, as I said earlier. So yeah, I use this for training, because if some scammer steals this account, then so be it. It's fine. I think this one is a $25,000 challenge account. But yeah, that's what I use it for. So it's just for you guys to learn from, and we have some fun with it and what have you. But yeah, I got a few different accounts on the go. And then got a few cash accounts, which I run myself, and my main thing is my investment accounts, which you guys are not interested in anyway because it's not trading, that's investing. And they don't have charts. They're just investment accounts. You just buy shares. Price to earnings ratio, stuff like that. Earnings per share. Yeah, that's a completely different ballgame. But I needed something to give you guys to show you guys how to trade. So I got these funded accounts, which are handy to show you guys how to trade with. They're actually funded accounts. Yeah. There's one there that I got. It's a $100,000 funded account, instant account, which is what have you. But for me to withdraw the money, they want me to make $12,000 on it every time. So to draw the money, you must first make $12,000. So be careful of that as well. But each one's got its own little quirks. I concentrate on my cash accounts more than I concentrate on this, but this is for you guys to learn from. The trouble is, Sir Lancelot, I get you. There's $600 to go on this account. Let's go for it. I get it. But when I'm trading on my own, I look at my cash account because that's where the big money is, and I forget about these accounts, and I don't follow them close enough. So that's why sometimes, I haven't even taken trades on them when we come back for the live show. So it's unfortunate, but you got to understand that the cash is where the money is. But I'll try. What I must try and do is I must try and somehow put this up alongside my main account so that and take the trades alongside or whatever, and try and bring these up. But they're good for training, and also I take more risk on my cash accounts. So I've got to be careful not to lose these accounts, obviously, for you guys, because I use them. But yeah, can't really take the same risks. Different scenario. The prop firm that I've got an instant account on, is it FX2? Let me just check here. Sorry, man. I never remember the names of all these companies. I'm just gonna. Funjo FX has got an instant account. Funjo FX. Sorry. Funjo FX. That's the instant. I think this one's FX2. Get confused. Yeah. But the cash accounts, you got to be careful who you use. Make sure you use a reputable company that's been around for a long time. And don't put your bank account number out there. I've seen so many YouTubers out there, and I don't know if it's real or if it's not real or what they're doing, but they're showing you their bank or their statements, they're showing you their accounts, they're showing you their trading accounts. And for me, that's risky. You're putting your not only your life out there, but your account number and all that kind of stuff. And it seems a bit strange. So I sometimes question whether that is or isn't, whatever the case. But if it is, it's crazy. I wouldn't do that. I've had bank accounts hacked before, and it's not funny. And then you're dealing with the fraud department and all the rest of it. And no, the guys are quick. They're really quick to get into your money, I can tell you now. And also, it's a form of insanity and stupidity to tell people how much you're worth. Let me tell you. If you want to get your kids kidnapped or something like that, go for it. But do yourself a favor. Keep it to yourself. Don't show off. Keep it real. Stay down to earth. Keep your feet on the ground. It's important. It's really important. Yes, enjoy the money. Have a nice car. Have a nice house. Be out there. But don't give too much information out. tell people too much. It's never good for them to know. There's so many people out there just lurking, waiting around the corner, just waiting for you. Actually, Fund Your FX is the one that basically on that 100K, I've got to make 12K to get the money out. But yeah, they haven't robbed me or anything. So yeah, that's what you need. They've been okay. They've been okay. They've been fine. I don't trust any of them at all. Not one of them. And, you know, before this year, I think I told you guys, before this year, I was in the realms of talking against funded accounts. And as far as I was concerned, they were all some kind of scam. But then I opened up to them and realized that they're useful. And they can be useful, not only to me for training you guys, but also for guys that don't want to go from learning and a demo and going straight into the market with their cash, that they can have that kind of in-between scenario where they can learn to use their psychology and fear because they've paid for an account, they have an account that can give them some money back, they can take a cut out of the account, off a instant funded account or a challenge account that you've succeeded with, whatever the case. And you're going to make some money out of it. So then your fear levels are in there and you can learn from that and you can pick up from that. And before you go and take your life savings, throw that in at the market as well, which is even more complicated because your fear levels, as I said to you, fear levels are much of a muchness. Fear levels depend on the type of person you are and how much money you've actually got in the bank account. If you have $1 million in the bank account and you go and risk $100,000, or you go and put $100,000 in the market and you risk $10,000 of that $100,000 and you start losing that $10,000, there's a certain fear factor or worry that you've lost that $10,000. But if you only had $100,000 to start with, so you didn't have $1 million, and you lost that same $10,000, your fear level would be exponentially higher, much higher than that guy who's got $1 million in the bank account. And that's a natural psychology. It's a natural fear, natural thing that goes down. So you've got to watch how much you're risking of your total cash capital in any one market or at any one time. It also depends on the person and how much fear that person or how much risk that person can handle, how much fear they can handle, how good they are psychologically with that type of thing. People have different thresholds as well, as far as that goes. Totally different thresholds. Boom, 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 boom. There's a lot less people here today. Not as many as usual. Maybe more will still come. We shall see. We shall see how it goes. We shall see if it gets any better. I'm just looking at the gold here because the gold has got quite a long bar coming down here. It's falling down quite hard and it's coming down quite desperately. And I guess the S&P 500 is waiting for something to happen later today. Because clearly you can see that tiny little candle, that little undecided candle, that little cross at the end of the show there. Just waiting for something to happen, waiting for something to go down, which is not happening, not going down. Yeah, that's quite crazy, to say the least. I wonder if it will shut down. If the governments in the US will shut down today. It'd be interesting to know. See these two trades here. Unfortunately, I have them on my live accounts as well. Well, this is a live account, but I'm talking about my cash account, my main cash account. And these two trades are on there as well. Yeah. And they're just going to drive me insane. Completely insane. Drive me nuts. The Australian dollar, is it going to go up today? It does look like it wants to go up, doesn't it? Definitely looks like it wants to go up. You know, the trouble with trading the Australian dollar and New Zealand dollar for me, and even the Japanese yen and Chinese yuan and all these things, is they normally have their little meetings and speeches when I'm asleep. Which is why I told you guys last week that I used to, at some stages, I would wake up at 2 or 3 o'clock in the morning just to check what's happening with the trade, just to check if it's going up or if it's going down or what's happening. And it was crazy. It was complete insanity. And I never want to have that situation again. But that's a point of overtrading. That's when you overtrade into a market, you put too much in the market, and you don't want to wake up in the morning and find it's all gone. That was years ago, many years ago. Yeah. I think it was even before the last crash, way before. Tell you what, 2 o'clock in the morning, up, checking what's happening. I have to leave the laptop on all the time. Go and check quickly what's going on, what's happening. There's a meeting going on in Australia or New Zealand talking about their economy and whatnot. No, that was insane. Imagine. You don't want to go there. That you don't want to do. So higher time frames are just better actually as well, because that's where higher time frames come into play as well. When you realize that the higher time frames work because you can actually go to sleep, because you can actually leave the office, because you can actually leave the trade running in the background, and it can run forever. It can just run in the background. And one day it'll get there and it'll take out your stop loss, it'll make you profit or whatever the case. You don't have to sit watching it all the time. And if you keep it far enough away from the spikes when they're having these meetings, then that also helps. You know, it makes it a little bit easier on everyone. But yeah, no, as I say, those are some insane moments, to say the least. Let me tell you. I'm just going to check something here. Waiting for this for a long time. No, still nothing. Okay. Interesting. Yes, finance. I'm just going to reload the news and see if anything's coming on there. No. When they say when they say the government's closing, you'd think they're throwing the president out of his home or something, out of his office. South Africa had an interesting week. The Tembisa hospital was robbed by the people that run it, or by the government or something. I don't know, people involved. And they took serious amounts of money, a couple of billion out of the kitty, left people that really needed that care in deep trouble. And you know, toughies type of thing. Yeah, that's so bad. Yet we still have a strong rand and we still have a strong market, and it makes no sense to me why people still want to invest here. I heard the other day that Walmart wants to come back here. I mean, they own a couple of the companies here. They own Builders, they own Massmart and a couple of others. But I heard they actually want to open some Walmart stores in South Africa. I'm like, wow, okay. That's great. Lovely. Love it. I'm just looking at this Aussie dollar pushing up here. It does look like it wants to push long. It's quite interesting that it's pushing hard. Quite interesting. There's not a lot of trades on today. Boom, 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 boom. Weren't we supposed to suggest trades? I forget now. We set up the trend line. Oh, okay, it's your experience with them. Random channels asking, how do you set up your trend lines? A trend line is easy. You just look for there's got to be 3 touch points on a trend line. And if there's 3 touch points, then you've got a trend line. I only use trend lines for my main support and resistance. So I'm going to take my main support and resistance in all likelihood off the day chart just to see which way things are going. So there's a resistance, there's a support on the day chart. And then I'm going to go back to the 4 hour And then I'm going to put things in on the 4-hour. For example, this red one is a support on the 4-hour. Just looking at that because it's important. I could draw another green line across here, but I don't need to. There's another kind of resistance over there that it's going to break through, which is the prior high. And then what I do is I draw the trend line in that area or in that range. For example, when it broke to the downside here, I would have had the trend line going through here, and then it counter trades the trend line, or it stays in the trend and it trades along in the trend. And here it's broken that trend, it's counter trending, so it was on the bearish, it's counter trending, it's breaking to the long side and going up. And if it breaks through that resistance and goes past that prior high, we have a breakout to the upside. So drawing the trend lines in is easy. You just look for the 3 touch points on the trend lines. So for example, if you go here to the S&P 500, there's no breakout here, but you could have bought long there and it would have stayed long. And then you could have gone short at the top here because it's going short. And then you can go long here again because it's going up, up, down, up, down. So you can trade with the trend, in the trend. We trade 3 ways. We trade in the trend, we trade in the range, and then we counter trend or breakout trade. Counter trade and breakout trade, pretty much the same thing. Only difference is a counter trade would be on the trend. That's a counter trade. And a breakout would simply be on the resistance. It's just terminology and naming. So what you're looking for is something to counter, something to break out or break away from the original pattern that you were in. So if it's in this range and it breaks out of that pattern, you're looking at a breakout. If it's in a trend and it breaks out of that pattern, looking at a counter trade and it's going the other way. Always draw your trend lines, make sure there's 3 touch points. I have been known to take a trend and just look at a trend and say, well, there's a trend, even if there is only 2 touch points. It doesn't matter because I can clearly see the trend, but that takes experience. If you don't have the experience, use the touch points to give yourself an indication of what's going on. The more touch points you got, the stronger the trend. Now remember this with resistance, support, trends, whatever. The more times that it touches an area, while it makes it a stronger area, and there is a lot of money there, and you can clearly see that that's an area of interest, by the same token, it's a bit like chipping away at a wall to get out, and breaking through. Eventually, it's going to break through, and you're going to get the breakout. Eventually, it's going to break through. So 6, 7 times it hits that spot, and you think, wow, that's a really good spot, because every single time it gets there, it clearly fails at that spot. So there's loads of money waiting at that spot. But there's a point when all that money is used up, it's going to break through. It's chipping away, chipping away, chipping away every time it hits there, and eventually it gets through. So just remember that. So while you look at it and say, oh, 3 points, there's only 3 points, that one's got 7 points. The 8th one, it might just break through because it's chipping away at that level and trying to get through that particular level. Eventually it might get through. So how many times does it hit? So here, 1, 2, 3, sort of 4. There's not much going on. It's not that bad a level. It could turn around and go back down. But if it hits it many, many, many times, there's a very good chance it could break through it and go the other way. So that's what you've got to look at as well. I know a lot of guys will, sort of look at it and go, But you can trade with moving average, you can trade with RSI, you can trade with Ichimoku, you can trade whatever you like. Fibonacci, so many ways you can trade in the markets. I know one particular trader that's traded with stochastic all his life. All his life is traded with stochastic, nothing else. Only stochastic. I mean, I actually don't rely on stochastic. I like stochastic, but I don't rely on it much. If I was to use it, I'd be like, maybe, maybe not. What everyone's waiting for, Sol and Charlotte, at the moment is the US government to shut down. What they're waiting for is effectively this. The site is closed. Do not enter the 3 areas where shutdown will hit fast. You see, they're busy negotiating their economy in the US, and this can cause, if there's no agreement, this causes government shutdown. And that's effectively what they're trying to sort out right now, and that's what everybody's waiting for, to see if that shuts down or not. That's where we are with it. Will it shut down or won't it shut down? And nobody knows. Nobody knows. Only they know. Now, the unfortunate thing about that is most people are sitting around thinking, it'll be fine, they'll sort it out, because they always do. Because every year this comes around. Just by the way, every time this happens, it comes around and it goes away. They sort it out. Except the last time in 2019, it actually did partially shut down, and then some people didn't get their salaries and that sort of thing. Because that's what happens. You'll stop getting economic data. Certain people in the government won't get their salaries, that sort of stuff. And it's a partial shutdown. And then if it continues on and it leads on, it can lead to a full shutdown. Then the problem will start to set in, and then there'll be some issues. Then there'll start to be some issues in the market. So everybody's waiting to see what's going to happen with that, in all likelihood. And that's what I'm seeing, is people are probably waiting to see what's going to happen with that more than anything else. It's, yeah. Yeah, there's a lot of sayings in the market, Solange, which are quite interesting. One of them is sell in May and go away. But I did my own research on that, and I figured out that a lot of these old sayings in the market, and a lot of these historical things where in May the market always goes down, in June the market always goes up, in December the market always goes up or down, and this, I mean, many times the market went up in December, and this many times the market went down in December. Now, this is all based, just like on charts, it's all based very much on, because it happened before, it'll probably happen again, because human beings are creatures of habit. So we expect it to happen again because we did it last time. But you've got to ask yourself the question, why do these things happen at these particular times of the year? And a lot of these things happen at these particular times of the year because of certain money flows within certain, like the USA, for example. Certain things happen at that time of the year, certain Federal Reserve payments or whatever the case. So they kind of happen at that time of the year every year. What changes it so that it goes the other way sometimes and not the same way as expected is maybe there's a difference in the economy, a difference in the amount of money spent, whatever the case. So that can change, and there can be differences in there. It's not some magic out of the sky that causes this to happen. It's not magic. It's because at certain times of the year, certain things happen in each individual economy, and each individual economy does certain things at that time. And those certain things can cause things to move in certain directions. I know it sounds a bit odd, but yeah, there's no magic pill. That's how it is. So these things do change. And on when I researched it and I looked at it, it's not always 100% the same, because certain factors change in the way things are done and the way things are paid and the way money comes in and out of countries, and it depends on the economy. It's not always the same. For example, why do markets sort of float up in December? And it's because of a lack of liquidity. In December, there's not that much money in the market, so it's mostly retail traders. And then the markets tend to, after the 15th and everyone's gone on holiday, the markets tend to float up. All the new traders that are on holiday over Christmas start buying, and that sort of thing, and these things start to float up. And then they all come back in January, they come back to work, and they all sell it off, and yeah, you know the story. You start to pick up these patterns in the market because of things that happen in the market, but those patterns don't hold true. Just be careful of those patterns. They tend to kick you from behind because you're expecting it to happen, and it doesn't happen, and you think, why didn't it happen? Yeah, it's not magic. Yeah, you see, like now, crypto, you said you sell in May and go away, it happened with crypto. But it's a funny thing, because here's the thing, crypto wasn't even around when that saying was invented. We didn't have crypto. There was no crypto. So yeah, it's much of a muchness. Maybe there was some magic that crypto kind of fell in May. But, you know, you'll find that it doesn't happen every May. It doesn't. Some Mays have been really good, insanely good. It just depends how the movement of the money worked out and how things went and who needed to be paid when. And sometimes these things can be postponed. And now you have a situation where you say, September, October is normally a good month. Now we've got this government shutdown looming. It could change everything. Because if they do shut down and they do end up having a problem, that might just change everything. But then if they get back on the road again, then you get this sudden acceleration and everything goes flying back up and everybody says October was a great month because everyone's happy. You've got to look at things for what they are. Dutchy says, so ask a lot. I love it. So Lunchalot is more than welcome to ask more than everyone else. He's a main contributor. He's around. And I love it when the guys ask lots of questions because that's what you're here for at the end of the day. You're here to figure it out. And so lunch uses it to have a chat with good old Rob. Exactly. No, that's what it's for, guys. That's what it's for. Don't be afraid to ask. You know, the one thing I learned very young in life, very important, is there are no stupid questions. There are only good questions. And the only reason somebody's asking the question is because they would like to know the answer. That means they need to know the answer. It's as simple as that. There are lots of things that we learn every day. You know, you learn something new every single day. No matter how experienced you are in any particular trade, you will learn something new every single day, whatever it might be. It might be trivial, it might be important. But that's how it goes. I can learn something from you guys about trading sometimes. Why not? Yeah. That's it. I always say, you know, I can't trade for you. I can only help you to become efficient and look after your own trading. It's if you can become proficient by yourself, because a lot of people would like to copy another trader to the T, but you can't do that because everybody's got a different psychology and everybody's got a different way of working and a different way of thinking. You just got to learn to become proficient. So what you need to learn from someone like myself is the basics, and you pick up the basics, you run with those basics, and then you design a system or a strategy that kind of works around the basics of what you get from me. And where you get in and take your trades and all that sort of thing will differ slightly, but you'll have that basis to work with, and that's the important part. Yep, David put that in a nutshell. Yeah, totally. Yeah, if you think I don't ask questions, you're sadly mistaken. I ask lots of questions and try and figure things out. And, you know, that's why I got to this point with trading. I didn't get here by just taking a chance. Asked a lot of questions. I figured a lot of things out. I sat and did a lot of research. I sat and had moments with myself thinking how, why, when, you know. I'll never forget the moment when it came to me when people said, you can't time the market. And I thought, what am I doing? What am I doing trying to time the market? If you can't time the market, what am I doing here? And you can only have time in the market. And then I realized that you can't time the market. That's quite correct. You can't time the market. You can't time a chart, but you can put a strategy in place. You can put a strategy in place to work around that. And that's, yeah, that's sitting and having a bit of a moment with yourself as well and thinking, what do I do here? How do I get around this? How do I work this out? Funnily enough, that's one of the few things that I didn't get from someone else. That's one of the few things I worked out for myself, but only because people kept telling me you can't time the market, only because people kept telling me that it's time in the market. And you know what? It hit home when it didn't come from a pro, when it didn't come from an experienced trader. It actually came from a friend. It actually came from someone who didn't really know much about trading. It said to me, you can't time the market. It's only timing the market. And it hit home because I thought, this psych is not even as good as me at this. And he's telling me this. I have to look at this. And that's when I looked at it in detail and kind of figured it out. Realized, no, he's right. You ain't timing the market, mate. There's no chance. Look at all the amount of times you get it wrong. Why are you getting it wrong if you can time the market? You shouldn't be getting it wrong ever if you can time the market. If the charts can predict the future, don't you agree with me that you should have a 100% success rate? Because none of us are that stupid that we can't follow a simple system that would make us a 100% success rate. So if you could time the market and charts could predict the future, then obviously you would get every single trade right, wouldn't you? Why are you getting trades wrong? Why are you losing so many trades if that's the case? And then you realize, well, wait, that's because charts can't tell you which way the market's going actually. That's not possible. So you have to find a way around that. And the only way to do that is with a strategy. Strategy of managing your risk and figuring out which way you want the markets to go. And the easiest thing, when you go to higher time frames and you pick a trade like this, where you put your stop loss in there, you put your take profit in there and you leave it and you walk away. If you sit here watching it as well, you're going to see those. Now we want red candles, right? We want red candles because we're short. You're going to see those green candles. And every time you see that green candle, you're going to think, it's going the other way. It's going against me now. So maybe I should get out of this trade. Maybe I should get out. But now I'm only $67 in profit here, and I'm thinking get out because it might be going against me. And then that's just ridiculous because I'm targeting $600. Why would I want to get out? It's 10 times more. So I want to wait for it to get there. You see, all the way along here, you get red and green candles. They don't all stay the same color in the same direction. It's about strategy. That's where the important part comes in, man. Once you figure that out, you make the money. Who has 100% success rate? Yeah, God, probably. Who else? Blue Mango. None of us are that stupid. Have you met me? No, you can't say that. So much a lot says not even God. You can take a look around. Yeah, no, totally. You cannot predict the future. Nobody can. And certainly charts can't. That's for sure. And there's a lot of people that will tell you can have a 70-80% win rate, success rate, all that sort of thing. Come on, guys. Gotta be real, man. Gotta be real. You know, the guys that make it are the guys that understand that you're gonna lose some trades. And then you put the strategy around it and you start realizing, you start working it out. The guys who get hit the hardest, or the people, let me not call it guys, because there are lots of ladies in trading. It's just that on this group, there's very few ladies in comparison. But okay, I'm hoping there'll be a lot more in the future. I look at it as so many people that lose are losing because of their overconfidence or because their belief in a chart or a system or an algorithm or a mathematical equation. And they tend to forget that you're actually trading against people, against human beings, against flesh and blood. There are people out there buying and selling. And when you're selling a share, it's like putting a for sale sign out and saying, hey, I'm selling this. Do you want to buy it? You know, it's basic trading. And that's what trading is all about. But because you only see charts, because you only see candles, you tend to forget that you're actually dealing with someone. You're buying somebody else's stock. You're buying from someone else. There's money moving between back and forward, back and forward, back and forward. That's money flow. And the money belongs to a human being. Even if it's a bot in the market that's running through the market, trying to look for trading, trying to look for liquidity, whatever the case, it doesn't matter as a human being behind that bot that's doing the search. It's just that that human being can't do it by themselves because it will take too long. So they put a program together that can go and do it for them and go and look for that stuff. It's a human being that's controlling it at the end of the day. Go and buy me 1 million shares. And it's difficult for you to go and look for each individual share as a human being yourself. So you ask the computer to do it for you. Computer, go and buy me 1 million shares. Go and search out those stop losses. Go and make those people think that we're searching out their stop losses and go and get all that money. And then all those traders come back and say, oh, they're searching out my stop losses. I love it. I love it when that comes about. It's always the best. Like someone's watching you. Yeah. Yeah, maybe we should make that our motto, Sir Lancelot. Those who trade are hot. Yeah, there you go. Rather than 18, well, those who trade are hot. I like that, yeah. I enjoy that. Not bad. Not bad. As they should be. Yeah. Love it. Yeah, imagine. People get caught up in some amazing things, but yeah, it's not about getting into the trade. Getting into the trade is quite tricky. You know, you want to get into this trade. So you want to get into this Australian dollar, US dollar trade. So getting into the trade is about these charts. So you're getting into the trade. So you're going to use this chart to get into the trade at a certain point because you've drawn a line and you've said, if it goes above that, I'm going to go long. And if it goes below that, I'm going to go short. So getting into the trade is actually the easy part because you're going to use a technical aspect or a fundamental aspect to get into the trade, to actually press the button and buy. That's not where the money is made. That's just you thinking, well, if it goes there, then I'm feeling confident it's going to go that way. And if it goes there, I'm feeling confident it's going to go that way. But that's not where the money is made. It's made in managing the trade. Once you're in a trade, that's when it becomes important. And that's when you've got to manage the trade. So it's not about taking the trade. It's about managing the trade. If I take all these indicators off here, you can make a decision as to which way you want to go, buy or sell. With no indicators, you can say, I feel like it's going up, so I will buy here. And then you need to manage that trade because that's how you're going to make your profit, by managing that trade. That's it. End of story. There's no other way of looking at it, to be fair. The only way to do it. My wife will never trade better than me. But I wouldn't mind. It would be great. It would just double the income, wouldn't it? Dutchy points out that he thinks most female traders are profitable because they are better with risk management. That's a possibility. Chris asked, do I scan all the FX pairs or just certain ones like the majors or ones that are strong, weak? Unfortunately, a lot of men are gamblers and Dutch is right about that. As far as scanning all the FX pairs, you see, Chris, it's difficult to scan all the FX pairs. I would like to be able to scan everything every day, but there's so much out there. So what I do is I'll trade any one of them. Okay, so if there's an FX pair that comes up and it looks good, I'll trade it. Even if I've never traded it in my life before, I'll trade it. I mean, I don't like crypto, but I'll trade it if there's a trade. So don't get me wrong when I say I'm going to look at a certain bunch of pairs, but I'll trade any pair, anyone whatsoever, but I can't scan them all every week or every day. It's too much work. I mean, I'm lazy, for heaven's sakes. So I want to sort of scan a bunch of FX pairs that are recognizable to me, let's say. So I will look at about 20 And those will be my favorites, you know, that I'll go back to on a regular basis because they're there and I know them and I've traded them before and there's enough there to trade. When there isn't enough there to trade, then I will start searching out other pairs, you know, go through other pairs and just see if there isn't anything else. And then you start adding another one into the pile or whatever the case, or taking one out and putting that one in. But it's very difficult to scan them all at the same time or to look at everything. You know, when you look at it, it takes a lot of time. So I reduce it down. I'll admit I reduce it down a little bit to looking. It's like shares. There's hundreds, 500 shares in the market. You can't buy them all. Well, you can, but, you know, it's difficult to monitor them all. So I reduce that down to, as far as the share market goes, I watch about 60 in total over time, and that's investments, okay? I don't sit and watch hundreds and hundreds and hundreds of different shares. I choose maybe the top 60 and that'll do for me. So be careful of that, you know. To say, there's two ways to look at it. I mean, it's not to say that I won't trade something out of the ordinary. I'll trade anything. But by the same token, I can't watch everything. It's difficult. So I watch the best ones. It's like the commodities, for example. I don't like trading the ones with low liquidity. So I just watch the ones with high liquidity and they go into my system. The indexes, I watch the main indexes, the big ones. There's a lot of indexes out there that I could watch. I just watch the main ones. That keeps me busy. Those are the ones with liquidity, the ones that are moving up and down. And the Forex pairs, I watch as many as I possibly can handle. Crypto, I keep to just the Bitcoin and the ETH at the moment. That's all I'm worried about. But crypto kind of moves around together anyway, so I'm not too worried about that. Yeah, if that answers your question. Okay, so guys, I'm actually going to head on my way now. I've got a few things to do, so I'm going to be on my way. Show's a bit quiet today anyway. Everyone's waiting for the US government to shut down. That should be interesting. Can't wait to see what happens with that. We're probably going to get some excitement if that happens. And then we'll take it from there and see how we go. But guys, I am going to be on my way now. I'm going to head down the road. So thanks for being here. Thanks for watching. It's been fun. It's been good. And as I always say, on that note, keep your feet in the ground, reach for the sky, make lots of money, and have an absolutely fabulous day further and enjoy. Thank you for being here, guys. And I'll see you guys on Thursday at 1400 GMT +2. It's unfortunate, but I do have something to go and do. So I'll chat to you later.